everybody, it's Kabani, your favorite broker, and I want to talk to you guys about buying real estate even in an aggressive market. If you guys have been following me, you guys know that I believe in buying real estate and holding it for a long period of time. I'm not one of those guys, investors that like to buy real estate and say, hey, in a year I'm going to make $100,000 and I'm going to flip it and I'm going to move on. It could happen. I think that it's a safer bet to go long term. And even in a tight market, I believe in buying real estate. One of the examples is this. I had opportunities to buy in 2013, 2014 townhouses in Pickering that were like $440,000 or $450,000. And I looked at these things, even being in the business, trading in the area, had an opportunity to buy these. No lineups, no nothing. Just go in, they give you your deposit checks and you're going to close 18 months later. I just never thought about it. You know, like I did think about it, but I just said, oh, it's already 440, 450. Like, where's this actually really going to go? Well, you know where it went? A few years later, these houses are trading for $700,000 now. I guess the way that I'm looking at this is that real estate is always going to grow, and it's a safer bet if you are looking at it in the long run. So I want to do a quick math with you guys. Even in a tight market right now where we have lower interest rates than we've seen in a very, very long time, I want to do a math on $600,000 property and show you guys what I mean by this. So now you buy a $600,000 property and you want to put the minimum down payment. So the minimum down payment is slightly more than 5% because you've crossed over that 500,000 mark. So I think it's like 5.83% down payment, which adds up to being about $35,000 in down payment. So $600,000 property, $35,000 down payment on this property, and that's the minimum you can get away with. There is going to be a CMHC mortgage premium that you have to pay because you're putting less than 20% down. But remember, that actually gets added to your total mortgage value. There is a component of PST that you have to pay on the insurance upfront, but the whole insurance amount actually gets added into the mortgage amount. Let's run through some of the numbers here right now. I'll give you guys a better illustration of what's going on. You buy a property for $600,000. You have about a 5.83% down payment, which is about $35,000. You have a mortgage insurance, which is about $22,600. And I factor in about miscellaneous closing costs with lawyers and everything, about $2,400. What we get out of that is this. Your total costs with your down payment, closing costs would end up to being somewhere around $37,000, $38,000. So that's your upfront cost to close on this property. I look at this and I say, hey, year over year, I think I'm going to make 5%. The property is going to appreciate at 5% year over year. What does that end up to being in 5 years at 5%? So a $600,000 property becomes a $765,000 property just year over year. We have low interest rates right now. So say, for example, you get a fixed rate for 5 years at 1.6%. So if you get this 1.6% interest rate, which is not really that hard to do, if you have a problem getting it, call me, I'll hook you up with the right people. Basically, what would end up happening is at the end of the 5-year term, including your mortgage premium that was added onto it, your mortgage balance would be $488,000, okay? So your property is worth $765,000, your mortgage balance is $488,000, and you've put in about $37,000, $38,000 into this. When you look at the net number after taking out your initial investment into the property, you basically will have an equity position of about $240,000 in 5 years. So now look, let's start to think outside of the box a little bit. You want to make $1 million quickly in 5 years? Maybe you could try to figure out a way to repeat this process with 4 houses. I mean, it's really hard to do, but I'm just saying, like, in order for you to build up this type of equity, even with the one property, like, you're going to be able to build up about $240,000 in 5 years. It's almost impossible, I would say, for the average person to save $240,000 in 5 years. Coming back to it, even in a tight market where things are looking aggressive, if you are a long-term investor, this would be a really good opportunity for you to get in where our interest rates are so low and is going to go down to paying down your principal. That's just a suggestion for this market. If we did the math and extended it out for 7 or 10 years, say for example, you bought this property, you lived in it for 5 years, you got that $240,000 in equity. If you work with smart mortgage people, they will be able to tell you how you can actually tap into that $240,000, maybe take out $100,000, $120,000, go find another property, put that down payment down on another property. Maybe that original property you bought, go rent that one out so that one starts to kind of float on its own while you got this other property going, and repeat this process while you have this other property continuing to appreciate. This is really how wealth is built in real estate, and it's not that complicated to do. If this is something that you guys are interested in doing, contact me, because I've been doing this since I was 21. So I knew in order for me to be able to gain some type of wealth, a really substantial type of wealth, is going to be through real estate investment. There's a lot of stuff when I was 21, when I started, people didn't tell me about this stuff stuff that I know 16, 17 years later is massive, and I think I can help a lot of people out. But it's always going to start with the one property and then having the right connections in order to leverage that property in order to move on to the next one. Again, if you guys have any questions about this, feel free to contact me. Leave me a comment. Let me know what you guys think. If you guys have done something like this before, share your experience with me. I'd love to hear how you guys have started to kind of build up your own equity in it. Again, any questions, feel free to leave me a comment, DM me, send me a text. I'll be more than happy to help you guys out. Until the next time, remember one thing, guys, get Kabani, get sold.
Sell it, sell it, sell it, sell it, sold. Sell it, sell it, sell it, sell it, sold. Sell it, sell it, sell it, sell it, sold. Sell it, sell it, sell it, sell it, sold.